Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, October 17, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, basically, we had a flat day. The SPY was up a nickel by the end of the day. That's a flat day. It is a red candle because we had what's called a gap and crap situation. The market gapped higher. She made a new high this morning, poked her head up above. The high of day is now, or the all-time high is now 586.12. That was today's high. That is a new all-time high. And then when you look at the intraday chart, you can see the market proceeded to sell off, fill the gap, bounce up, or come short of the gap, bounce up, and then fill the gap into the closing bell, finishing at the flat line. So by the end of the day, nothing happened. When you look at the daily chart, was there any change, any material change to the charts? No, it wasn't an up day. It wasn't a down day. They made a new high. Fine. That doesn't change the chart. It doesn't really matter where the high is. Makes no difference whether the high was 3 days ago or today, within a dollar or so of each other. Really doesn't matter. Doesn't come up in the rounding. It's all made for television. Basically, today was a nothing day. No change on the chart. It's a move it along kind of situation. From a weekly chart perspective, and we have one more day until the week is closed, but when you look at this, you say, okay, well, maybe we have a sign and or signal of a trend change brewing. That is possible. Won't know until Friday's close. However, you're in the neighborhood of an on-time situation as well. So we might want to note that the weekly chart may have what we call in the trading parlance importance. Little housekeeping item while I have your attention. Inside the number members and inside the live room members, tomorrow will be a no live room type of Friday. There will be the numbers posted on the board for inside the number members, live room members as well. If there are early stocks on the move, and the list of numbers, from the new table, all the markets that we're now providing for inside the number members and live room members. This table will be posted. Do we really need to discuss anything further with the SPY? No, it would just be beating a dead horse already. Speaking of inside the numbers, I want to show you today's commentary. Other than a trend day down most of the day with that gap in between, we can identify an important place, a pivot. So what I do with the notes is I point out a few important things each day. And then what I urge you to do is read the notes, pause the video, and go back to the chart to double check the work if you're at all interested in the commentary for the S&P each and every day. Now you have a whole new reason to get involved in inside the numbers as we're covering all these markets. It's in a beta test, so we'll see what happens. We'll see what the demand is going forward. As a result, and I'll say this couple more times, and then probably by next week or the end of the month for sure, we're going to raise the price of inside the numbers because with all this information, it deserves a different price. I've decided I'm no longer giving away my information. The pivot was 584.25. What's the definition, very simply, of a pivot? Meaning, what do we think about when we say, here's the pivot? Above, she's bullish. Below, she's not. Doesn't have to be collapse-ish below it, but below is the bear case to either fall or leak lower. Above is the bull case to either run or creep higher. It's the pivot. Think of it like a seesaw. It's the point in between. Right of the vertical is today's activity. Here's a 5-minute SPY chart. And you can see 584.25, in and around 584.25. Look, they come and run a test of it from underneath, get rejected, get above for a little while, stay above, Can't really get very far, but once they come below and start closing candles below again, they fall. It was today's pivot. What I told traders in the live room that were picking up the market long down here, as I said, hey, look, they're going to get back to at least run a test of the pivot, and that happened multiple times. Pause the video, read the notes, go back to the chart to double check the work. We had 3 stocks on the move today. 2 did not hit their entry objectives, so they're off the board. The other one, CNC, we'll take a look at the chart real quick. 62.65 was the second number on the board. It opened below the first entry objective. Therefore, it's off the board, doesn't exist. That's the way we do things. This one didn't really do anything, just kind of hung around here for most of the session. From an official standpoint, they gave you the base hit right over here, but they didn't really give you a rocket ride. They hung around all day. The takeaway is the base hit happened and the numbers work. Here's what the chart of the Qs looked like from an intraday perspective off that table with intraday numbers, by the way. About Camp IWM, again, we'll get to the daily charts in a moment, but here's an intraday chart. This would be your pivot, if you will. You can see the market fought it in the morning, got below, went to where? Support, bounced back up to, we'll call the pivot, tried to get above, couldn't, and finished out on that number. These were numbers that were on the board at 0 dark 30 this morning. Here's that table again. Here's the IWM numbers. 226.05, 224.90. 226.05, that's this line here. 224.90 is the second blue line, or the bottom blue line. Do you think you could find this information useful each and every day, having the numbers? What about the daily chart over in Camp IWM? Any material change here? No, not really. It was basically, instead of a flat day, they were down 62 cents, about 1/4%. We're not going to make a federal case out of that. The S&P was flat. IWM is down a little bit. They were up bigger yesterday, and therefore today we'll call a retracement / pullback operation in the midst of an uptrend. Down days do happen, believe it or not. What about the folks down at the transportation department? We got to put on our umpire calling balls and strikes hat on for a moment. Now, this is my second favorite market leading indicator, a number 1 canary in the coal mine. So they were a give back from yesterday's big up move. They were down 1.4% today, or 230 bones. So this is basically a give back from yesterday. And while they didn't close below yesterday's low, they certainly tested it. They're above all the moving averages, so we'll certainly give the trend its due benefit of the doubt. But nevertheless, from a canary standpoint, we're going to heed down 230 points while everything else was either up or flat, and we're just going to take it, put it on the table as a puzzle piece. Folks down at the transportation department, planes, trains, and automobiles. So let's say the transports come down some more. Here's a picture of the IYT. This is how you would trade within the transports, one of the ways. The IYT is an exchange-traded product that tracks the transportation average. 69.60 to 68.65 would be a zone for a bounce back in the other direction. These are the numbers out of the Automagical calculator. As you can see, there's a gap just below 68.65. The gap is 68.48. In here is the number. This is the zone for a bounce back in the other direction. I would write that down, put it on a sticky note. What about the Qs from a daily chart perspective? While we did have another gap and crap similar to the S&P, the Qs were still up 34 cents by the end of the day today. They're above all the moving averages, which means what? The trend is in fact your friend. Until what? Until your shit gets thrown out the window. There's no material change on the chart from yesterday. Forget the candle. Forget the fact that it's a red candle, white candle, blue candle, green candle, black candle. It doesn't matter. You look at the Qs, They were up 34 cents. There was no material change on the chart. They're above all the moving averages. Trend is your friend. What about the XLF? Anything going on there? Similar gap and crap situation like everything else. And maybe the market is going to have follow through on the downside, but we can't sit here tonight and say expect follow through on the downside because they can be up tomorrow just the same as they were down in the afternoon today. We all know that. The XLF was up 13 points at the end of the day today, or 13 cents. They're in an uptrend. They're extended far from home base. Will they work their way back toward home base? Go sideways for a while. Give home base a chance to creep up to price. Any combination and all of the above, if you will, is possible and probable whenever they get too far extended from home base. What about Smashmouth, the Philadelphia Semiconductor Index? We had the big down day the other day, and now they're putting in a bearish wedge-ish situation. Another day where it was a gap and crap, finished on the lows. That certainly is a bearish signal or sign. It's not a bearish guarantee of follow-through. After all, we could get a Friday floater into the last day of regular way options expiration week. However, we have an open gap down here. You have a big time down candle. We talked about this. This one was different than other stuff. This was down about 14 bucks on the day. You look around on the chart and you don't see that many candles this large. So you have to take notice. That candle in itself makes that situation become a puzzle piece, and it's on the table. So we're going to keep watching the SMH as we always do. The SMH is a pretty good proxy for the tech space. It's kind of a canary, if you will, for the tech space. And if the tech space rolls over, guess what? Everything's going to roll over in a corrective fashion. But we are the umpire calling balls and strikes, so we must note that all that being said, bearish wedge-ish pattern, they are above all the moving averages, and they were up $4 today, over $4 or 1.7% in the SMH. So even though they had a gap and crap finished on the lows, they still were up on the day, but within this bearish wedge-ish situation going on, yet still above all the moving averages. The trend is your friend, but this one is on thin ice, as they say in the trading parlance. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.